Investing has never been easier. Nowadays, you can open an investment account from as little as £1, invest in stocks, shares, ETFs, funds, anything you want with almost no commission. The only thing you have to pay for on Trading 212 is stamp duty, which is across the board and is a tax that is inevitable to pay. So, as I said, the reason why people haven't been investing with this is because they don't know what to invest in or they think they haven't got enough money. So I wanted to make this video to show how you can start investing with very little money. Again, that is relative. So depending on your circumstances, a certain amount of money to you might be not a lot, but it might be a lot to someone else. So I'm going to set this up, show you what to invest in, how to invest, and how to set it up so it's completely automated so you can make your money work for you without even lifting a finger. So first thing you want to do is set up an account on Trading 212. And you can deposit £1 to open the account, like I said. And to start off and give you a kickstart, you can also use my link below and we both get a free share. So you can see you've got the promotion. And that'll be the link below and you can get a free share worth up to £100. Now that you've got your investment account, you'll see it looking like this. It will say 000. You'll have nothing invested, no returns, other than your free share. And then what you want to do is you can search through all the different stocks, shares, ETFs you can invest in. But what we want to do is we want to make your money grow with very little incremental monies over time. You want to watch it grow, automated. So what we want to do is go over to this pie tab here. Again, you can do this on the app or on the website. So once you open up your pies, you want to create a pie. You want to add the instruments. And now when you're investing in stocks and shares, a tip is to go through an ETF. This is an exchange traded fund. So this means you're investing not in one stock or share that can have risks. You're investing in a fund that holds loads of different stocks and shares, meaning you're diversified, which reduces your risk. A good tip is to click on this most popular tab here, and then you can look at some of the most popular ETFs. So one that has done really well over previous years is the Vanguard S&P 500 ETF. So if we want to add this to our pie, we click next, and then you can see the average annual returns for the last 5 years are 14.24%. So the Vanguard S&P 500 holds the top 500 US companies. So this includes Amazon, Facebook, Google, all the top names. So if we just want to auto name this, we're going to call it Money Auto. And then we can change the icon, play around with that. And then we want to go to next. So now we can set up our auto invest. So this means the investment schedule is automated with deposits. And again, you can change it later on in time. So now this is where you want to set how you're investing. So you can see it's got a time frame here. So say if you're 20 years old, I'm 22. So if I want to retire in my mid 40s, so 45. So I'm saying I want to invest for the next 25 years. And this is why I said about a small amount of money. So this is how much your initial deposit can be. You can start off with as little as £1. Obviously that's dependent on you. Say you've got £500 to start off with, or £1,000. But then after this, after all your bills, all your whatever's paid, you have maybe £400 or £500 left a month. So you can only invest £100 worth of that every single month. Again, you can invest as little as £1, but we want to invest let's say £200 every month. And again, you can change the schedule to suit you. So you can do this daily, weekly, every 2 weeks, every 2 months, 6 months. For this demonstration, we're going to go monthly. And you can see here, invest in this S&P 500 based on its 5 years previous returns. A £200 monthly deposit after 25 years. So in my mid 40s, so I'm still 20 years away from the government retirement age, I would have had over £500,000 from £200 a month, which is less than half a car payment for most people. So now this is set up, you can click on this, it'll show you the summary of it. You can fund a pie, and that is where you put your deposit in. You can pay your deposits. And now you've got your money auto on track. You can see your goals here, you can change it, you can reinvest dividends automated. And all this then will come out every single month until your end date, which is you can change the target and set up however you want. Now, going into detail as why I picked this S&P 500. This is because historically it has done beat most mutual fund and actively managed funds, meaning people you pay 2-3% commission to run the actual fund for you. This is actually tends to outperform, especially when you consider the high fees that they charge. This is, I think, 0.004% fees or something stupidly low like that, and it holds the top 500 US companies. And the problem with thinking you can beat the market is, yeah, sure, you can say, Well, simply to beat it, all you have to do is not pick the bad companies. But bad companies today are tomorrow's like turnaround story, and they're the ones who have higher growth potential. But obviously you can't pick and choose, and you don't know what's going to do well. So which is why an ETF is a good thing for a starter. Someone starting off and looking to grow money slowly but surely. And again, since you're starting off, you want to make sure you have a long-term mindset. The recommended is to not invest for less than 5 years. If you do get more into it and you want to start adding individual stocks and shares, again, if you go on, you can click add, you can search through, you can add testers. These are just like popular stocks on top here. But you can choose which ones you want to include into your pie. But it is recommended to hold large holdings in ETFs as they're automatically diversified, and it takes the stress away from you. Like I said, if you're starting off, you don't really know what you're doing. You just want something you can put your money away, automate it, and forget about it. And Trading 212 does this really nicely with the projections, the goals. This just makes it really easy for anyone to start off and invest. And again, if you want to change your value production, you can change your investment schedule, how much you want to invest. Say if we up this to £400, £500, you can see doubling your monthly investments every month. It just changes the goal drastically. And this is because of the effect of compounding interest. So every year you might get 10% interest. So after year one, you've got from your £1,000, say you've got 1,100. Then the next year you've got 10% of 1,100, which is £110, and it goes up to £121, and stuff like. And that just adds up over time. So as your interest earning interest, so you can see how this curve just shoots up, and it's completely automated, and it just makes your life so much easier, stress-free. And there will be ups and downs in this. It won't consistently grow like this. But when you're investing consistently every month, you'll be buying at lower prices. And the long term, the stock market has always gone up over the past, I think it's 100 years or 90 years. So this is a great start for a beginner. So that kind of sums up how to start off and invest with little money over time. Again, it's relative. You can choose how much you want to invest monthly or every 2 weeks. But it's a great starting point to invest in a broad market index fund, which that S&P 500 index fund is. So thanks for watching. If you enjoyed the video, leave a like. And I'll catch you guys next time.